Some people are aggressive, some people are conservative. The beginner's guide to stocks versus bonds is what we're going to talk about and how you can get started today. Hey Peter, I've invested in stocks before, but what about bonds? Just learned about it, but tell me more about that.
A lot of people play aggressive, they look at stock, but they don't look at defensive, which is bonds. You have to have that in part of your portfolio. If you've only done stocks, what's your experience with stocks?
Well, stocks, it's basically like I started listening to what friends said and I bought what they bought, and then I lost a ton of money.
Right.
And then
how do you feel?
I felt like crap. I felt like, okay, don't listen to what you
broke
say.
Friends.
Broke friends. And then later I started, okay, well, maybe I'll do my due diligence. Maybe I'll do some homework, not just hear some friends and read some news. Maybe I'll actually study the companies I invest in. So that's when I started to dabble into stocks, and I made a bit of money. But then I realized that, I wasn't willing to put in the time and effort to really go into it more regularly.
Right. And that's recipe for failure, right?
Correct.
That's recipe for failure. You can't win unless you know what you're doing.
That's
so
right.
When it comes to stocks and bonds, I have a fine portfolio of the two. And the reason why I do is because when you can't win a hockey game if everybody went on offense, you have to play defense at sometimes. Because when things are not going your way, you want to make sure that you can pull on your bonds in terms of getting yield. You want to make sure that your bonds are able to give you some sort of return.
So you're saying that stocks is an offensive play and bonds is a defensive play?
Yeah, for the most part. But at the same time, you got to understand, your defensive plays sometimes could be offensive too, right? So because that gives you a certain amount of income, you're able to actually do a little bit more with your stocks portfolio. So for example, Microsoft, companies like blue chip stocks, they're typically a little bit more risk adverse. They're a little bit less volatile. Okay. They're able to produce the results time and time again through income, right? It's just like real estate. They have income. So when they have income, those stocks become a little bit more valuable because people know they can deliver year in, year out.
Yeah.
So you get a little bit of offensive, but the bonds allow you to get some fixed return. And you want that in part of your portfolio, because when things don't go well, it's every donkey can go make money when things are going up. It's the people lose their shirt when things go down, but when things go down, that's where the opportunities lie, right? That's where people make the most amount of money. People become billionaires, millionaires because of a drop. So we need to take advantage of that. When things don't go as we plan, you can pull on your stocks to get that yield.
Yeah.
You can actually redeem a lot of your bonds and actually start getting into what we call value investing in stocks and start deploying those in the stocks that have fundamental core uniqueness, companies that have great management. That's what you can do. And when markets go really high, as they're hitting records high right now, what you want to be able to do is take some of those and deploy a little bit more into bonds. That's where robotic investing comes in. That's where theories of ETF comes in. You want to be able to interchange between the two as the market conditions change.
So Peter, I know what they're saying. Like, oh, bonds. I've never bought bonds before. What should I buy? How do I know which bonds to buy? Well, I don't know anything. Where do I study? Where do I go to learn more about this?
Well, you can look at the bond portfolio. Bond portfolio does get traded, bonds specifically does get traded. Yes, the high net worth look at that significantly as part of their portfolio, because without that, you can't have those type of gains. So with bonds, I would recommend the people who are starting up for the very first time look at bond portfolios. Right?
Okay,
so it's a series of bonds. So it's a group of bonds.
Like a bond mutual fund.
Yeah, it's a bond mutual fund if you want to call it that. Right? Like I say.
That doesn't take fees.
A lot lower, right? But because at the end of the day, there's a big difference though. Why I look at bond portfolios that have portfolio management. Yes, they may charge fees, but they know which of the bonds. They study the fundamental. What bonds are is debt provided by the companies.
Correct.
So Microsoft would have a bond and go, well, you know what, we need to raise X amount of dollars, right? Billions of dollars through bonds, and we want to be able to use that to build our new office. We want to be able to deploy to a new gaming machine. We want to be able to deploy that for our operations. They issue those bonds to raise money so they can deploy for long-term 10 year worth of management. So portfolio managers are able to now take a series of those companies, know those quality companies, and actually buy into their bonds. That's how bond portfolios work.
Okay.
So
And why do you suggest bond portfolios versus just buying bonds?
because most bonds are about $200,000 US to start.
Wow.
Right? So that's where the high net worth look at. However, a dummied down version or a beginner's version, I'd look at a bond portfolio. That allows more access. That can go into your TFSA, that can go into your RSP. That can be used all round for your investing, even if it was just saving for the short term. So those are things that gives you a little bit of return, right, over time.
So you're saying that to get into a bond specifically is $200,000.
Usually.
But to get into a bond portfolio, it's much less.
Much less, and that's more dummied down.
How much?
You can start off with
$100,
$100, $200, $300 a month.
Oh,
right?
wow.
So you can consistently apply that to
Okay.
your portfolio.
Like build it.
You can build it, but at the same time, understand why you're doing it. You're doing it not because of the return. You're doing it because it allows you to have some money growing compound interest month after month, year after year. And that allows your compound interest is huge to your portfolio.
What
right?
kind of interest rates are we talking about?
Well, bond portfolios ranges from 2%, 4%, 6%. Some of the bond portfolio in some certain times can exceed that. But I would say, again, these are your defensive plays. This is what goes in your portfolio to ensure that when things don't go right, you have the money so you can actually deploy into equities. That's value investing. So you can deploy that at the right timing.
Okay, okay. So for the beginner who's not too sure how to get started, who's bought maybe a couple stocks and they're thinking about whether to get bonds, you would recommend that as part of their portfolio. Would you say 50-50 or?
Well, that's all individual, right? Every investor has got their own thing. Determine your goals, right? So this is where you go talk to a financial planner. This is where you talk to, find a professional. You need people that are better than you at what they do, and preferably find somebody wealthier than you to teach you, right? To coach you, to actually advise you. Don't listen to the broke. Listen to the broke people, you're not going to get wealthy. Right? That does fundamentally not work. I look for people who are financially 5 times, 10 times, 100 times more successful than me to listen to. Right? Because they've done it again and again and again. They've got the proven track record. You don't want that, hey, no offense, you don't want that realtor you're their first client. That's probably not the guy you want selling your property, your $1 million property. Go look for the people who are financial planners, CFPs, or insurance license, mutual funds license. Yeah, talk to these people and understand what they have got to offer. Yes, they have the ability to help you, but choose the people wisely because there's a lot of them.
Are there some telltale signs, warnings, like, oh, which bonds shouldn't you buy or?
Well, no, that now looks into every individual company, right? Bonds, like I say, are just debt issued by these companies. So I would always say to people, when you're investing in businesses, which really stocks are, investing in businesses. So imagine you become the owner of these companies, right? That's how you need to think about stocks and bonds. You can't think about stocks and bonds as just a ticker, something that you just buy and sell. Great, though there are a lot of people who do day trading. Fantastic. You're already busy enough. Wealthy people are not looking at day trading because they don't need another job. As a matter of fact, we don't even want our first one. So we have to go deploy our money to things that grow over time, right? And that's what value investing is. Your bonds allow you to invest in stocks, redeem your bonds so you can invest in stocks when they're down. When things go really well and your stocks are going fantastic, start making some gains. Take those gains and deploy into bonds. That allows you to balance a little bit, right? So you always understand what goes up must come down, what goes down must come up.
So when stocks go up, bonds usually
not necessarily, not intrinsically,
not.
But what happens is there's more money flowing to the stock market. So when more money flows to the stock market and things are booming, there may be a little bit less interest in perhaps the bonds.
And then that's where you can find the value.
That's where you can find value. You can find value in bonds too. Right? But this is where I recommend listening or speaking to the financial planner. Have consultants. I have people who advise me, right? I ultimately pull the trigger, but understand what I'm doing. All my investor friends, all my investor clients, they look at people who are financially wealthy to advise them on what they can do on their portfolio. So it's a combination of bonds, ETFs, it could be even T-bills, right? Or different currencies. So look at all the different asset classes, right? But as a beginner, just to start, I would advise definitely have a little bit of bond in your portfolio, and I think your nearby financial advisor will be able to give you more of what you're looking for. And perhaps if you're saving for the home, there's a few other plans that you might want to opt for. There's so many things out there. Get started.
And then, like you said, stocks and bonds, it's not just a beginner play. Like even you're talking about high net worth invest in stocks and bonds as well.
Absolutely.
So it's not just, oh, like that's only for the like super high net worth. Like the beginners can get started, talk to their financial advisor and try to, you know, maybe start off with some bond portfolios. And you said you can add in funds little by little. So you don't just have to invest 50,000 right away.
Right. Dollar cost averaging, and that's another key.
We'll talk about that in another video.
Compound money, dollar cost averaging, understand how you can get your money to grow. If you got $50,000, $100,000 of your money growing, I determine what you have for that purpose. But I would say sometimes, even for the high net worth, we don't all just invest heavily into real estate. We allocate our wealth to different series of asset classes. And when certain asset classes go shoot the lights out, what we do is we look to deploy some of that money elsewhere
to balance the portfolio.
Out. We want to achieve double-digit return. I know a lot of people go, oh yeah, I can't do that. You know, where can you get that? But you got to go talk to people, learn about how to invest, learn about the fundamentals. You know, compound interest is huge in getting your portfolio started, and only time can let your money grow.
Correct. So if you found value, make sure you hit the subscribe button, turn on the notification bell. And also, we discussed a lot of topics that you might not be very familiar with, T-bills and all those things. Make sure you comment and write down your questions. We might shoot another video on that specific comment that you posted down below. So for more great information and insight from Peter Leung and I, stay tuned for the next video. Thank you for watching my video. Tell me what you liked about it. Comment below. And if you haven't done so already, subscribe and turn on the notification bell so you'll be notified of future videos. And if you want to learn more about real estate, click the videos over here.